I am Isabelle Taillandier. I am Managing Director for Nestlé Purina France, which is a leader on the pet food market in France with iconic brands you may know like Friskies, Purina One, Pro Plan, Gourmet, or Felix. First, I would like to take the opportunity really to thank the Unleashed team for organizing this Pet Tech Meetup in this beautiful city of Paris. I must say that a fefew months ago, I was a bit, let's say, jealous that the first Pet Tech Meetup had happened in another region. So I challenged Kim and said, we should do this in France. So I'm very happy that it happened here. 80 startups and around 15 investors. That's a lot. That's a big success. I'm very proud of it. I am honored really to welcome you here. I think it also shows the dynamism of the pet tech in France, which is important. Of course, we have also partners, startups from all of Europe, but I think I'm very glad also to show this, also because on a personal side, it's also my 30th birthday in pet care. So I know for you guys, much younger than me, it looks like impossible, but yes, it's possible. And I can tell you that I've seen the market change, grow, and really in terms of numbers, of course, also in numbers of pets, mainly cats, by the way, because when I started on the previous century, there were as much cats as dogs, but now it has changed. But it has also changed in terms of the technicity of the products, of availability of services for the pet parents. So I think it's very interesting for me to have seen this evolution and to see where we are now. It has completely changed and really moved from pet food to pet care. And also I think pet care gained in credibility and exposure. I think our relation with pet, the pet-human bond has really changed. Not that people didn't love their pet before, but now it's more like their pet parents. And you can see also that more people recognize the benefits of pets in the relation with human, and more are welcome in the public spaces like hospitals or retirement homes or even in town halls. So I will give you a few words about Purina. Sorry, I need to do this. And just a little bit on Purina's story. Purina started as animal feeding, horse feeding in 1894 in the US, and then rapidly went on dog food with a brand called Dog Chow in 26. And since the beginning, the ambition was to deliver the best and purest nutrition for animals. And more than 125 years after, this is still our ambition. But for all these years, we had a strong purpose, which is creating richer lives for people and for the pets and people who love them. And this was built on our credo, which is that when people and pets live together, life becomes better. And I think it's very important that nutrition is at the core of what we do. But now we want to go beyond, and we want really to take the hand of pet parents and help them through the journey of having a pet. And that's where I think the pet tech comes in, okay? Because this is where you can bring the services that will help this parent-pet journey. So we decided to support Unleashed, and I think Jan and Kim presented it well, so I'm not going to redo it. I'm very happy to see that some of the startups we have been with on the 20-week, let's say, time for Unleashed are here today, and many others with a great potential. You know that the French pet tech is evaluated at 2.4 billion raised in the last 20 years by a European Pet Observatory done by Santé Vet. And I think it's one of the first countries, so that's why also I wanted this event to be hosted here. So now, we will do this roundtable with a deep dive into the market dynamics, both in France but also in Europe. And for this, I have invited two investors, Laurent Drouin, Brand Manager Director at Euraseo, and Cécile Chevalier, a Principal at Verlinvest, but I will let you present yourselves. Thank you.
Can everyone hear me? Yes. So thank you, Isabelle, for the introduction, and thank you to the entire Purina Unleashed team for having me on this panel and for organizing such a great conference today. So just a few words on Vert Invest. So you all know who we are. We are a global investment company with more than 2 billion of assets under management. We've been around for 25 years, investing in a number of exciting consumer verticals across food, health, wellness, digital, and pet. So the pet space, we started investing in 2015 with Chewy.com. For those who know about Chewy, it's the largest e-commerce in the US, which we sold for $3 billion in 2017 to PetSmart, so just before IPO. And since then, we invested in a number of other pet companies. We did Catkin, direct-to-consumer cat fresh food company in the UK through our venture arm called V3, with Jimmy over there if you want to meet after. After that, we invested in Tom & Co., which is the leading pet retail in Belgium, number one, and then number 2 or 3 in France today with more than 200 retail locations. And then the last one we did is in the vet space with Nesto and Veterinicum, which are leading vet chains in Germany, Netherlands, and in Belgium. So we've been quite active in the pet space, and we traditionally invest 20 million plus to 200, so a bit late stage compared to most of you guys in the audience, but that's why we started a venture fund, which does anything from 1 to 6 million. So yes, that's it from a short overview.
Thank you. On my side, so I'm with Eurazeo Brands, which is the growth consumer fund of Eurazeo. Eurazeo is an asset manager, 35 billion. Eurazeo Brands is managing 800 million between New York and Paris. We have 2 teams in New York, 1 in Paris. We invest in a couple of verticals, a bit the same, beauty, pet, accessories, same kind of tickets, 20 to 100 million. In terms of the pet sector, we've done only 1 investment. We've done Ultra Premium Direct, which I think you will talk to later today. This is a strategy in which we spend quite a lot of time. Probably in Europe right now, at our ticket size, we don't see that many companies, but probably looking forward to seeing some of you, reaching the size where we can invest. We are very excited. I think pet has been, is, and will be one of the key sector for the investing community in consumer. We see incredible amount of interest on any asset that is on the market. Obviously, we'll talk about the KPIs that you need to reach, probably the virtuosity of your business model. But I think this is one of the best sector you can be in today.
Thank you. So maybe I will try to speak loud so that you can keep the mic, because I just gonna ask the question. So we see that pet tech is really booming in Europe and in France, and I would like to know, what does it make it different from other sectors? What is different in your view in the pet tech versus other, let's say, human tech you can work on? That's a tough one.
I think the pet market, pet care market right now is quite unique because of, I would say, the growth potential. When you look at, the number of pets, the way people treat their pets, the evolution of service around pets, this is an incredible opportunity. And you have very, few sectors, frankly, I don't even know one, that can compete with that right now on the consumer market. So I think this is one of a kind. The second thing that is very interesting is not only the fact it's a growing market, but this is a market, I think you name it, you say we went from feed to care. And this is very important because you're not only answering a basic need, feeding. You are answering a need for training, education, service. And this is incredible for you guys because actually it allows you to do 2 things. One is to create a brand, a real brand being the kind of incarnation of the loyalty, the service, the credibility you have. And the second thing is obviously it creates margin opportunity. As soon as you get out of the basic, need, you create a lot of potential for margin. And this is very important. So growth opportunity plus, the emotional part that creates potentially loyalty and margin, this makes it an incredible sector.
And I would just add maybe one key important part of the reason why investors really focus on the pet space today is the resilience of the market, especially in in difficult times where we've seen inflation going through the roof. What we've been learning is that pet space, similar to beauty in somehow, is very, very resilient. You've seen a lot of macro tailwinds from COVID, humanization of pets, increased ownership, a shift towards the younger generation. And all of these make, the spend per pet as a whole increasing, whether it's in food, it's in health, it's in services. And on that basis, we've seen a lot of new innovations coming out of the pet space. So I think from an investor point of view, us investing in consumer businesses, we're looking for resiliency and for emotions, for increased spend per pet, increased spend per person. Here we talk pet. So that makes it very attractive. And I think Isabelle has mentioned, but when we look at the past 10 years, there has been more than 2 billion of funds flowing into the pet market. More than 30,000 jobs have been created. So we know it's a market that is here to stay with a lot of positive tailwinds.
Yeah, thank you for that. I think if I can give you two numbers on the pet food, numbers or facts. We know, for example, that in pet food, this is one of the category, because we have the view on all consumer goods, one of the category where people don't change their habits so easily, and we've seen it so far not happening, whether it's one of the last categories with baby food, where people would change, of course. At a moment where they have really no more money, maybe they will change. I wouldn't pretend it will never happen, but at a certain point. But I think it is really a category that is relatively resilient, as you said. And in terms of growth, it's true that it's been a tremendous, especially since COVID. We've doubled between 20 and 22 the level of growth, and even this year, of course, with inflation, it's even redoubled, I would say. Now it will come to normal, but I think it's important. Last thing I think is also important for me, the key criteria that I've seen, is that we see that more and more pet parents are young. And I think that makes a big difference, because it's also people more digitally enabled and really looking for, they use apps, digital services, which is maybe less the case for other kind of pet owners. Cécile.
One thing on that, I think we say right now that pet food is a new baby food. And by the way, I'm not sure it's a good or bad news, but the pet is the new baby. In the US, people who are actually starting a life together now have a pet together. They start with a pet. Maybe they'll go to a baby, but they start with a pet. And you can see the amount of services around that. It's incredible. The care, so it's just a fact.
Yeah. I wouldn't say internally at Nestlé with my colleagues from nutrition, but yeah, I agree. So, for Cécile, I have a question for you. Could you tell us what do you look for when considering investing in a local pet startup? What makes a difference between a startup and another?
Good question. I think the number one thing that we look for when we invest, especially in local pet businesses, is scalability, right? Which is a bit contradictory because you mentioned local, but as global investor, we need to have a business that has potential to expand beyond its local market, right? Whether it's through new channels in a new country, new type of models, but we need to see some form of scalability even earlier on. We are looking for, that's the number one. The second one, which is as important as the first one, I would say, is defensible model. Obviously, we've seen a lot of new businesses coming out of the pet space, whether it's in food, in health, services. And to differentiate, you need to have something that stands out, that is unique, and that can truly, communicate and resonate with your audience, and not create, another businesses that we've seen multiple times, because it's going to be very difficult to stand up. Sorry. And one specific example of that, I mean, we've seen COVID period. A lot of pet food businesses have emerged online as D2C, but now COVID is kind of over, and then people go back to the traditional grocery channels or pet specialty, and these guys are somehow struggling because it's just too packed as an online space. So you need to really differentiate and find consumers. That touch into my third point. Be able to find consumers where they shop. So thinking about omni-channel, whether it's grocery channel I mentioned for food business, pet specialty, vet. You need to be wherever consumers are and shop. So scalability, defensibility, and being available across the entire customer journey.
And the question for you, Laurent, if you can add on, how do you assess the scalability?
I would probably just continue on the first one. Just don't forget that it's a consumer market, so it's about a product and a brand. You need to have a very strong product, and you need to build a brand. And the second point around that is, I think, during COVID especially, people, there was such a push or a pull on the D2C online market that, not everything was selling, but it was easy to sell. I think you need to remember that online and DTC in general is a tool, is an incredible tool actually to create experience, to create a service. But it's only a tool, it's not a reason to be. So this tool has to serve a brand, serve a product to create eventually a differentiated brand. So on the scalability part, I think once you need to have those key elements in place, in my view, a differentiated brand, a reason to be, a service, a competitive advantage, and probably at the end, how you measure that. I think the first one for us is the gross margin. This is Mathieu will talk to you about gross margin, but he's been the gatekeeper in his company forever on the gross margin side. Any project, it's tough, but it's critical. If you think about it, a gross margin is actually what the consumer is willing to pay on top of the true price of the service or the product. And this is really a good way to measure the value of what you're bringing to the market. And the second thing is this gross margin, I think it's very difficult to change the gross margin of a product over time. You can have scale impact, but it's not doubling the gross margin. I've never seen that personally, apart in software or really tech, where it's kind of different. And the second thing I would say, which is very important, is this gross margin will allow you to invest below the gross margin. So invest in people, invest in in tools, and this creates the kind of virtuous circle of the P&L where the more you grow, the more you have means to invest and fuel the growth. So that's the scalability. Eventually, it's about the product, the brand, the differentiation, but you measure it through gross margin.
So finally, it's the same model as we operate in every category. Whether we're a startup or a corporate, we have the same, I would say, thresholds and a way to look at things. Thank you for that. So now I have a question more specific on France, which is for both of you, and maybe Cécile, you have a different view because you're not also from French, I would say, investor. Do you see a specific dynamic in pet tech in France or not? Or what is your view, on this dynamism also over time, I would say?
I think it's not an easy question to answer. From a French-specific perspective, I would say, and referring to my point earlier, we've seen a lot of pet food innovation emerging from COVID period somehow. A lot of D2C businesses with different propositions whatsoever. But comparing France to other markets, food has been for me the key growth enabler in the pet tech space. If we look at Sweden or the UK, for example, where we know the digital penetration is much higher, we've seen a lot of health tech businesses, insurance businesses. In France, from a health, I would say, and insurance perspective, we've seen some examples, but less so than in other countries. But I think it's just a matter of where the French market is at when it comes to tech perspective. We are less tech savvy than in other markets. So yes, more digital e-com businesses than purely tech businesses. Yeah.
And maybe on our side, being also in the US, you've got two things. I think the US market is very, very early. I would say is much more advanced. It's bigger. You've got scale, very rapidly, and you've got people. The purchasing power is much higher. So if you see the US is probably 5 to 10 years, ahead of what's happening in Europe. So I'm not saying it's a great advice, but when you look at what's going on in the US, you have a quite good chance that some of it is happening in Europe at some point. The second thing is still, I think France is one of the best markets, top 3 markets. When you look from an investor perspective at Europe, obviously we don't look at individual markets. We look at Europe, and you've got 3 big markets in Europe, which is the UK, France, and Germany. The rest is good, but the tier 1 for us is really, you have to be somewhere in those 3 markets. So even if we are not early, and I agree with you on the tech side, it's not very, there's not much right now. We still think that it's a great market to be in, because eventually that's a volume market and you can make margin.
And can I just add, yes, and I would just add one more point to that. In France specifically, for food businesses, the grocery channel remains the biggest channel, right? So I think it's 50% of the total food value. So by grocery, I mean, Carrefour, Auchan, all of the traditional supermarkets. If you go into other markets such as the Nordic or the UK or the US, you have a prevalence for pet specialty retail. So hence you have to think through the assortment as a food brand when you want to expand in France or outside.
But I think on that, it's a risk and an opportunity, because obviously working with Carrefour is not easy, and they are not really helping a lot of innovation in the market in general. It's really about the price and the margin. But the fact that pet specialty stores are not so big in Europe is an opportunity to go D2C, which in the US is very difficult, because the pet specialty stores are so big online and offline that frankly D2C in the US is not a real market, I would say, in our view.
So all you say is really true. I can give you a few insights. So the market was 65% grocery retailers 10 years ago, 5% e-commerce, and mainly grocery.com, I would say. And then the rest was pet specialties, vets, and breeders, and so on. And now it's exactly that. It's 50% grocery, but it's 25% e-commerce. So it's not so small, I would say. I would say we've been late, but now we are kind of catching up. Not maybe with the most advanced countries, but it's growing fast. So I think it's interesting to have this in mind. And you're completely right. The D2C is really increasing a lot. There's a lot of potential in France, of course, for D2C. A little bit of reluctance, I think, due to things that have happened in the past, in the way people see this type of services. But there's quite a great potential. I think it's somehow you've covered a little bit of what you think. Why you think France is as a specific, or not specific, but is interesting for investors. I can see it myself, because when with Purina, we are doing also a journey with acquisition, starting with Whammies in 2018, so to establish our place in the consumer journey, but also, let's say, acquiring Tails.com, for example, in the UK, or Lily's Kitchen, or Terra Canis, etc. And there's always a great will to develop in France, because it's a big market, one of the biggest, but it happens that it is quite tough, I would say. So I would like to know, why do you think what are the challenges or the barriers that investors see in France that they don't see in other countries that you would not have said already, like digital savvy or whatever? Do you see any other barriers? maybe it's emotional, it's about the way we operate. I don't know. Any barriers you would think of? If you're French, you can say it.
No, I think it's a barrier, but it's not such a bad barrier. It's very competitive. In general, it's a big market, and you got quite a lot of entrepreneurs, in France. So anything you do, you won't be alone. From an investor perspective, it's good and bad. Good because if you're successful in France, you're likely to be good because you've been fighting your spot. But you have a chance not to be successful because the competition is very big. Probably the second thing is still is on the consumer side. The French consumer is very price driven. It's really not specific to France, but probably a bit more so. He's been educated by Carrefour, Leclerc to really think about price. So sometimes it's a bit more difficult to go for quality. To let him know what you're paying for. But in general, I think it's a bit what you were saying. In France, we're usually a bit late, but when we start doing things, it's not so bad. So I think right now we're in a good spot. You've got a big market. You've got a consumer that's getting more educated on quality, so you can offer him services. You just need to win the competition.
And yes, one last point that I've mentioned already would be the channel dynamism, right? It's being different. If we look at subscription businesses, obviously the penetration of subscription businesses in France is way lower than in the US or in the UK. We've had some great success stories in France, but still there is kind of a reluctance for French consumers to subscribe to whether it's food or health, just because it's less of a cultural thing, I would say.
Yeah, but a fun fact about that is, probably one of the best consumer at Ultra Premium Direct is people returning consumer who are not subscribing. So we have a lot of people who don't want to subscribe for cultural reason. French don't like to subscribe, but they are actually very, very loyal and don't get the discount. So it's a weird thing. It's sometimes a bit, but it's not a bad consumer. It's just a bit of a difficult consumer. But again, I think back to your point, if you make it in France, the general view is that you have a chance to make it outside. Not in every market, because the German consumer is going to be very different. But you have a chance to make it outside France because it's known to be a tough market.
It's very true what you say, because we experience, for example, when you have to consent on cookies, we are one of the countries where the most people drop, I think, together with Italy. So I don't know if there's a kind of, I don't want to do that. Do you have in your mind, in your head, any success stories of startups in pet tech that you have not invested in, that you would like to quote in any country, of course, but not only in France? Now that would be too narrow.
I thought it was a French exercise, sorry, so I thought about a name that was French, and who wasn't in the room, not to create any conflict, obviously. But there is one good example of a French pet product design sell quite successfully in France only, both online and offline, and it's called Zumalia. I don't know if you guys are familiar. It's in this online e-commerce food space. You have the leader prize fighter called Zooplus. So it's difficult somehow to compete directly with these guys. But Zumalia has managed to scale the online business quite successfully. And on top of that, adding an offline presence. So they started expanding with 30, 40 stores offline in the southwest of France. So in a, again, very competitive market, which is France, driven by, grocery channel when it comes to pet food, with a lower penetration of specialty pet retail, and leading online guys being Zooplus. I think they managed to do quite a good job. And again, we know France is driven by price as number one factor when you buy food, and I think Zumalia has been betting on price, assortment, and quality of the service, which is super important for French consumers. They've been ranking the top when it comes to customer service.
Maybe one in the UK, which goes Link Bells. It's a pet supplement business. it's a very interesting market, but frankly, very difficult to get loyalty from. To convince people about the value add, that they see the effect of the product. And they've been doing an incredible job, being specialized. I think is probably the first, good idea they had. The quality of the product and the virtuosity of the business model, because frankly, they have an incredible P&L.
Thank you very much. So what kind of advice would you give to a startup that should keep in mind when they pitch or when they are operating in the local market? Would you give one or two key advice each? Or do you have a kind of, a sheet of one pager of don't forget to do this, which I do sometimes. So what kind of advice could you give? Who wants to start?
Yeah, so on top of everything that we've said when it comes to scalability, being differentiated, etc., key point for me would be stay focused. It can take stay focused to your product, to your brand, to your model. It can take time to scale, and I think that's fine. But you don't want to overpromise, go too fast, and miss some of the key steps to achieve all of what we say, being scaling. Making sure you understand your customers. So being focused, I think, is the most important, is the best advice I would give to the entire room here.
I'll go the same route. I think is stay focused on your consumer. This is the start of everything. This is your reason to be. You need to create, a relationship with him, loyalty, know him, ask him questions as much as you can. I think something that we see companies not doing enough is consumer survey. This is incredibly powerful. You get a lot of learnings. With the years, you might think you know what they want. You have a vision, you have an idea of what they want, but you're usually a bit wrong. Not much, but a bit wrong. And this little bit wrong you have is probably the difference between being good and being great. So listen to him, ask him questions. Don't hesitate to change a bit sometimes. But this is, eventually this is why we're here, is because, they want to purchase your product, and eventually they want to stay loyal to what you are selling them.
Reminds me one of the motto that my first marketing manager told me is that marketing is going from mistake to mistake. So that's really true, because you keep improving. I would say this is exactly true. Are there any I'm still on time? 3 minutes? Okay, so 3 minutes. I'm not on time anymore. So maybe I can ask if there is open question. Thank you very much, and we will see if there are any questions from the audience. Please, if you have questions, it's a general question that is for the interest of everybody. Individual questions will be addressed in the one-to-one. So I can take maybe one question or one or two questions from the audience. Okay.
Hi, I'm Claire and I would like to know. Can I speak a little bit? Hello. Everyone. I was talking to these guys. So I would like to know, to what extent do you look at founders and their ability to lead a company as a differentiator to your investments?
I would say great question. I think when we look at the past and our investments, founders are probably the key success factor of any of our investments. So when we write about founders, we usually write about the investment. When we're wrong about founders, we're usually wrong about our investments. So you're right. It's key. I think what we're looking for in general is this mix of probably being looking for a new innovation. So they need to think a bit differently about the market, because if you want to compete head to head with the big guys, unlikely that you'll be successful. So you need to have a vision about what you can bring to the market, something new. But I would say we also like that there's a bit of old school thinking in the company, because we're talking about gross margin, we're talking about convincing a consumer to switch from one product to another. So we need to be also really on the ground. So it's a real mix here about innovation, which is digital capabilities, data, being consumer centric. But also, it's not also, you're not, inventing, we're not in AI, we're not, there is a consumer is switching slowly to a new product, so you need to be very focused on that. So you need to have in the founder or in the founders this double ability to think, creatively, but also to stay really focused on the consumer.
It's a very good question, but I would say because we invest from a very invest perspective at a later stage, usually the business and the founding team has proven success, right? So the founding team, so it's critical, obviously don't get me wrong, when we sit down with entrepreneurs, we want to make sure we're 100% aligned on the vision and the partnership, because we call it a partnership and not a typical investment. We need to make sure they're listening to us, we're listening to them. So it's a real commitment. But assessing a founding team, I think is more so valid when you invest at an earlier stage where the business is, scaling, slowly ramping up, where you have to trust the team more than anything else, because the product market fit also has not yet been proven.
I kind of a bit disagree with that, because I see your point, but I do think that even a model that has been successful and reached 20 million, to take it from 20 to 50 or to 100, sometimes the founders also need to evolve. And the founder that's been very good, probably can show some limits there. And you can work with that, but it's better if you have the founder that can make it to 50 to 100. It's easier in a way. But I agree with you. You've proven by the model. But I think especially in high growth disrupting companies, it's a partnership, but the founders needs to be very, very strong. And also, to your point, needs to be very committed. We do the same, which are partnerships, very committed toward the next frontier, the next ceiling we want to break together. For us, as for you, if we have founders that are looking to exit, we just don't do investments. And if we think that the primary reason is the cash out, we just don't invest.
Yeah, I think it's the same rationale. One thing to add, and just to tell you again how important the founding team is, even at a later stage, we always, when we invest in a consumer business, we do a kind of due diligence on the founders, and that being, we have one of the best HR coach that you can find. She spends 2 or 3 hours with all of the founders separately, and then ask questions about the vision, how it is to work with someone else, just to make sure that we have 100% alignment on the next 5-10 years journey, and that there is no red flag coming of that report. So it's
I'd love to have that.
Sometimes a bit time consuming, but we hear a lot of insights from these reports.
Thank you for your answers. I think without revealing how we judge when we do Unleashed, but if I remember correctly, when we do the judging, we have a question which is the fit with the culture. I think that's very important. So that's only for startups, of course, but when we do the Unleashed, but for accelerating startups, but I think it's very important. So thank you for your attention. I will close the session here. We remain at your disposal during the day. And I will, so I thank you, Laurent, and thank you, Cécile, for your time. Thank you. And I will leave the floor to Thibaut and Jeanne and Thibaut to host the next panel.
Thank you.